So I'll give you my perspective along with 10 million other perspectives that people are reading about
Yeah.
in the newspapers. I think firstly, operationally, it's been a very interesting transition for us into work from home because as you probably know, and you can hear from my accent, we're a South African company, and there's two challenges that we are faced with in South Africa that very few first world countries really appreciate, and that's that quality of internet connectivity and quality of electricity and reliability of electricity. So in fact, the transition to work from home for us has been more than just telling our employees to go and start working from home, right? We've had to upgrade internet connectivity for our employees. We've had to buy everyone generators for their houses because we get these electricity brownouts, they call them brownouts or power failures, for hours every day. So having a little UPS for 30 minutes doesn't do it. We actually went out and bought generators for our operational staff. So operationally, it's been a very interesting experience, right? And logistically, quite interesting. But I think we're there. Obviously, it's only been the first week of lockdown. Especially South Africa is really locked down. People can't even walk outside. So, it's been a challenge. As a company, or let's just say, there's kind of in the financial industry, if we look at the market, the exchange traded industry and the OTC industry, I guess the outlook should be different in those two. We're obviously our brokers are seeing massive volumes at the moment, right? The kind of double-edged sword, the other side of that is that our brokers are also seeing a lot of margin calls, right? So traders, although they're trading a lot, they are seeing a lot of loss of customers, which is very concerning. Once you have a bad taste of something or bad experience, it's very difficult to come back. So I think that really I'm hoping that certainly we're promoting some of our risk management tools to our brokers, and we're getting some brokers to listen and say, hey, this is actually the time to start looking after your traders, making sure they manage their risk, because volatility is so high. It's easy to lose your cash so quickly, right? And then you'll step away and never come back to the industry, right? On the exchange traded side, I guess there's less of that kind of risk because people don't get the same level of leverage as they do in the OTC industry, and reports from our exchange brokers is that obviously volumes are up and leads are up and deposits are up, and everyone wants to get involved. So that's a good thing. Although I think that again, the other side of that is that there's obviously globally, economically speaking, there's going to be a lot of loss of jobs and loss of personal income. So medium term and long term, how much expendable income is there going to be for speculative trade, right? There's always, your retirement funds, and that's a totally different story altogether. But in terms of having a few $1,000s to speculatively trade the market, where we're going to be 3 months from now or 6 months from now, how much spare cash are you actually going to have to do that kind of speculative trade, right? Some people argue that those people are gamblers and they'll always have that money, they'll find that money. Other people say, well, no, people are not gamblers. They actually want to try and, take their hard-earned money and turn a quick buck. And really the question is where they're going to be in 3 months or 6 months from that. How much of that, should we say, expendable income are they going to have
will still be available? Yeah.
Right. So I think now, certainly the message we're putting out to our brokers is look after your traders, make sure they don't overexpose themselves, make sure they're managing their risk.